Hello everyone, welcome to a breakdown on EU. In today's video, I'm going to break down a trade that I took on Tuesday and I'll explain my entire thought process behind it, why I took that trade, what I was looking for, and how did I executed it. First off, let's look at the daily time frame as always because we start from the higher time frame to establish two things, the overall market context and our higher time frame drawn liquidity or directional buys. Now, if you've been following my weekly and daily outlooks on EU, then you'd already know that I had this specific daily swing high marked as my potential drawn liquidity. And on Tuesday, when we opened, we still hadn't reached the drawn liquidity, which meant that my directional buys remained bullish on Tuesday. And that told me one important thing, which is that I should be primarily looking for long or bullish trades rather than shorts, right? And by having this drawn liquidity as my guide, it filtered out 50% of the bad trades for me. Think about it. By completely eliminating the bearish side by having this bullish drawn liquidity, I no longer had to second guess myself with conflicting trade ideas or conflicting bearish ideas, right? I automatically invalidated all the bearish setups, which meant that I could now focus solely and only on the high probability long setups or high probability bullish setups, right? This is the directional bias that I had on Tuesday. This exact swing high was my drawn liquidity on Tuesday, and my directional bias was bullish. The next step for me was to figure out exactly where I could enter on the lower time frame to align that lower time frame trade idea with this bullish directional bias. And to do that, I needed to move down lower to the 4 hour time frame, and there I had to find a 4 hour candle range and a key level to potentially position myself around that market context towards this higher time frame ground liquidity. So let's look at the 4 hour time frame and let's see what we've got here. When we look at the 4 hour time frame, we can see that the Tuesday's candle opened right here and immediately price went into a ranging profile during the Asian session and formed this 4 hour ranging candle, right? And looking to the left, we can see that there was no internal range liquidity left, right? There was no internal range liquidity left to either fill it or rebalance, right? Because we already had this fair value gap which was tested on Monday. We had this internal range liquidity in the form of this FEG which was also tested and filled, and along with that we had this SMT divergence with GU, right? We had this whole narrative on the 4 hour time frame and this whole market context, and the only liquidity that was left was above us, which was the liquidity above this swing high, right? The only liquidity that we had was above the daily swing high, right, which was our drawn liquidity. This was an important clue because if there's no liquidity left below us, right, and all the remaining liquidity is above the current price, then the market has a higher probability of moving up. And that meant that during the London Open, I had a strong confirmation that on Tuesday price was likely going to go straight up towards the drawn liquidity without any retracements, without any pullbacks or consolidations. Why? Because we had already done everything needed in terms of liquidity collection. However, before I could take an entry, I wanted to see a manipulation profile below the Asian range that would also confirm that price could purge this 4 hour candle range, right? And along with that, it would also test this 4 hour order block, this 4 hour key level. And these two factors, this 4 hour candle range and this key level, these two factors combined would give me the market context I needed to back my trade up. So on Tuesday, what I did is I waited for this candle range to be purged at a key tag. This was the narrative that I built before the London Open session. Now let's go down to the 15-minute time frame and let's see how did I framed an entry around this 4-hour candle range. On the 15-minute time frame, you can see that this is the Asian range that we've got, right? You can see that during the Asian session, we formed this ranging price action, which formed this Asian range. And this is the 4-hour candle range low that we've got. What I did is I waited for a manipulation profile below this Asian range and below this 4-hour candle range, right? And you can see that price did indeed had this manipulation profile during the 1 a.m. key macro, right? The 1 a.m. hourly candle or the 1 a.m. hour is a key macro for manipulation profile to happen or for candle ranges to be purged or for our key levels to be tested. And you can see that exactly during this hour, we not only purged this 4-hour candle range low, we also had a manipulation profile below this Asian range, and with that we also tested the 4-hour order block. And after that I waited for price to close higher and form an order block. And you can see that with this exact candle we closed above these consecutive down close candles. And if you know about the definition of an order block, you would know that an order block is a candle or a consecutive group of candles which takes out liquidity or fills liquidity. And you can see that in this exact scenario, these four consecutive down close candles took out this liquidity, the liquidity below this low and this Asian range low. And after that, you can see that with this exact 15-minute candle, we closed above these four bearish down close candles and we formed an order block, right? These four bearish candles together as a whole form this big order block. And what happened is that price came down lower, tested that order block, and then it expanded straight away from here towards the drawn liquidity, and it took it out after the London close session, right? Your entry right here would have been at the high or at the open of this order block with your stop loss below the order block, and you would have targeted this drawn liquidity, right? This is exactly how your trade would have looked like, right? My entry was right here at the open of this order block with my stop loss below this order block, and I had a fixed target of 3:1 ratio, right? This is exactly how my trade looked like.